So, hi, this is Selva Freigedo, research analyst at Portfolio Publishing. And I'm very happy to be here with Liza McDonald, who's the head of responsible investment at First State Super. Thank you for joining us.
Thank you for having me, Selva.
Thank you. I just wanted to start by asking you a bit more about yourself and your role at First State Super and what led you there.
Yeah, absolutely. So my role is head of responsible investment. So I look after our ESG integration approach across the whole of the portfolio. I've been with First State Super now for 13 and a half years. So quite a long number of different roles over the years, but focused on ESG and responsible investment over the last 10 years with First State Super. So it's really exciting to be part of a fund who really has that purpose around delivering returns, but how they deliver returns and the impact it can have on the society and the environment. So that drives me every day, and it's my passion. I come from a governance and a risk and compliance background, and it just sort of evolved throughout the fund in terms of how we started looking at our ESG approach, and I was able to sort of really take that on as a role within the firm. And sitting where we are now as a $125 billion fund at First State Super, it's certainly a lot of responsibility, but I really do enjoy it.
And could you tell us a bit more about First State Super's approach on ESG and what's your approach specifically on investing in renewable energies?
Yes. Our approach is one of ESG integration. So when we are looking at either appointing a fund manager or doing any of our direct assets, and particularly in the infrastructure space, so if we are looking at renewables or other infrastructure assets, we get involved in the due diligence phase and looking at all of the whatever different or material ESG risks or opportunities that present. So whether it's about safety, whether about environmental land impacts, all of the different environmental or social criteria, we get involved, my team, at looking at that due diligence. So in terms of particularly renewable energy, we've had a focus on looking at the transition and how we can transition to a low carbon economy. And so part of that is actually having a strategy to invest in renewables and to also invest in the technology that might be related to renewables. So it mightn't actually be the renewable energy infrastructure assets itself, but is there technology or other, parts of the value chain around renewables that we can invest in as well. And we have been sort of focused on that since 2015 when we brought out our first climate change strategy.
I was actually quite interested in that in the surrounding of also the renewable energy. So you're also investing in industries that surround. So you're looking at things like what type of things are you looking at? Are you looking at like cybersecurity or AI or
Yeah, so a lot of, so we've looked at some battery storage opportunities. We've looked at waste and recycling. So even though it's sort of not renewables, it goes into that circular economy of how we can reduce emissions. So there's some opportunities around waste, recycling, and then, as I said, any sort of technology that might support that transition to a low carbon economy. The larger investments we've done to date have been in direct renewable assets. So we've invested in Snowtown 2, which is in South Australia. We have some renewable, or we did have a really large exposure to renewable assets in Asia. And we'd held those since 2012, and we were able to sell and exit those and make a really good return for our members. And we've also got some renewable assets in Brazil as well. So we have been investing in this area for some time, and it's sort of, we want to expand on that, and we also want to be able to support the transition. So looking at those other ways that we can invest in opportunities to reduce emissions.
Do you I saw that China in 2018 they stopped taking on waste management. They stopped taking a lot of the recycling from other countries. And have you seen quite a bit of change there in infrastructure getting here to Australia, getting built in Australia, or you expect that at some point?
Look, I think so. There's obviously a number of players in the Australian context and market that do a lot of recycling. And there was certainly an issue in Australia when China did stop taking our recycling. So we know that there's been investment from some of those listed companies to really enhance and to expand their recycling, because we've obviously had to come up with other ways to sort of reduce that waste. But I also think it is about, we see a lot of the community and a lot of sort of individuals and local councils really sort of taking on the problem itself and trying to reduce the waste. And I think, you know, we have to start from the ground up, and we can certainly invest in all the opportunities as well. But it's really exciting to sort of see just even the community response to trying to reduce waste, trying to reduce their emissions, and how they can contribute to this as well.
I also wanted to talk a bit about risk, and it's quite an interesting time right now with the pandemic. We've seen oil prices collapse. So what do you see are the risks for investors in the long term with thermal coal and with just carbon emissions in general?
Yeah, really good question. One of the, as part of our climate change portfolio transition plan, one of the first industries we did look at from a financial risk and return perspective was thermal coal, and we came to the view that it certainly posed a stranded asset risk in the long term. So we did make the decision to divest from thermal coal and then not to invest in any future thermal coal projects or infrastructure or companies that generate revenue from thermal coal. And that really is about thinking of the long-term risks and opportunities, and that as we transition, you know, we want to be able to invest in lower carbon energy sources to be able to assist with that transition. But it's certainly a view that we took around thermal coal, and that it would be a stranded asset risk for us.
Do you have an estimate on the impact on what this trends? Do you have any numbers on how this could look like, and also how like, are you looking specifically then at divesting on thermal coal? Are you looking at anything else apart from thermal coal too?
So we will continue to review and obviously look at all energy sources as we progress under our climate change transition plan. So it really is about understanding the risks and opportunities from all of the energy sources. We've certainly seen a response from some Australian asset owners in terms of divesting from thermal coal. Globally, there's certainly been a lot of asset owners and financial institutions divesting. We've also seen the insurers also, you know, really thinking about their exposure to thermal coal companies. And there's certainly been a lot of, I guess, divestment or exclusion on thermal coal in the last sort of, you know, year even, as people do sort of look at their climate change risk and opportunity as part of their investment process. So I think, you know, we'll see a lot more, but it really is also understanding how we can support that transition. So it's really important. It's obviously an industry, it employs people, it supports communities. So how we can support that transition as well.
Do you have any theories about why it's happening now, why this transition into low carbon emission is happening now, and why this is the time, like why now basically?
Yeah, so it's an interesting question, because for us, we've actually been focused on this since 2015. So it's probably just been, you know, more evidence from science in terms of changing climate, and really sort of thinking about how we can manage the risk and sort of making those decisions. So in 2015, when we put our first sort of climate strategy out, it was about engaging, it was about trying to find the opportunities. I think in the last 5 years, it's really the market and the dynamics and the consumer sort of response to climate change has really changed and been heightened. And we certainly saw that as a fund after the bushfires in Australia at the start of the year, getting lots of, you know, inquiries from our members around what we were investing in and what we were doing in response to climate change risks, and continuing to invest in certain sectors. So it was probably a bit of a catalyst to really go, okay, what can we do, how can we manage that risk, and what decisions can we make, which led to for us, that thermal coal divestment, but then also looking at the rest of the portfolio and how we can position that over the longer term. So I think that really just, gave us an opportunity to sort of sit back and really look at what we should be doing. And one, it's to sort of, ensure we're protecting our members' retirement savings as well.
What types of barometers are you using to invest in renewables? Where do you see the potential? And in what sectors are you seeing the biggest changes?
Yeah, so certainly, there's been a lot of talk around green hydrogen, a lot of, we certainly see Australia as a land of lots of sun and wind. So certainly, as we look for that. And just to be very clear as well, when we're looking at those opportunities, they have to meet the return and risk profile that we're looking in any asset class. So generally, it might be private equity, it could be infrastructure, it could be equities, and it could even be green bonds. So looking at green bonds that we could invest in to support renewable technology as well. So understanding the returns and that it fits within our return profile, we're certainly, seeing a lot more opportunities in Australia, which is great to be able to invest in Australian renewable energy. There's probably, we know that in some markets that renewable energy is sort of the main energy source, which is why we'd invested in Brazil in terms of the renewable investments there. But we're certainly seeing a lot more. The European Union's put out a roadmap around sustainability and green investment. So we certainly expect to see a lot more opportunity coming out of those and of regulation globally.
And you said you've been looking at this since 2015. Are you seeing more investment coming into this area? And are you, especially in recent times, are you looking at even more investment? Is there like an economic case for investing in green energy also?
Yes, absolutely. We're certainly seeing a lot more opportunity now than when we first started looking in 2015. And it's certainly, lots of investors are also looking for the opportunities as well. So it's certainly making sure that we're focused on, the assets that we're want to put into the portfolio and will deliver returns for our members. So there still really is that. So whilst, we have sort of targets in terms of how much we want to invest in renewable energy or we want to invest in the transition, it's also making sure the return profile is there. But, as I said, there's certainly a lot more opportunities there for us to be looking at in terms of investment.
What types of risks? I mean, there's opportunity, but there's also risk. Now, what type of risks are you also taking into consideration when you're investing in renewables?
Probably policy and regulation and sort of, investing in markets where the policy and regulation supports, renewable energy is certainly, gives us a little bit more comfort on that risk spectrum. But it's also, with any asset that we look at, we're thinking about the sustainability of the asset and where, location, geography, and, there's certainly, there is risk in renewables, there's risk in sort of every investment, but it's getting comfortable that the assets that we're investing in have good PPPs, so in terms of the contracts and the takeoffs that are associated with those assets, and that certainly gives us a lot more comfort when we're looking at the opportunity.
When you mean geography, are you looking exclusively in Australia, or are you looking also around, I mean, you mentioned Brazil also, are you looking around the world too?
Yeah, no, we are looking globally, but we've certainly, the most recent transactions that we have done have been based in Australia. So we're certainly looking domestically, but we are looking globally as well.
And is there anything else you think that our subscribers should know about investing in renewables?
Look, I think, it's certainly, I think, a really important time for investors to really support the transition to a low carbon economy. So looking at the opportunities that do exist to be able to support that transition, is really important from an investment perspective. And, but yes, as with any investing, you've got to, consider the risks as well. But, there's certainly opportunities out there for investors.
Well, thank you very much for joining us. It's been a pleasure to speak with you. Thank you very much.
Thanks, Selva.